Hallo? Everything should be working. Perfect. I'm gonna share the link to the YouTube live stream in the Discord chat right here. Yes, of course, Trader Deb, you can unmute yourself to ask me something. No problems at all. Everything should be working. Perfect. Okay, I'm gonna YouTube live stream in the background. That's working out now. It won't unmute. Hey, maybe I can sort this out for you. Trader Deb. I don't even find you in live stream 4. That's weird. I don't see you in the live stream 4 channel right here. I'm here. Okay. Trader. Here we go. Let me fix that for you. Now it should work.
Hello, how are you?
Good, and you?
I'm good, thank you. Thank you for those awesome indicators.
No problem at all.
So I was watching one of your videos on YouTube last night when you explained how to use them all.
Yeah.
And your voice runs perfect, but the video is not streaming.
Yes. I had when I did the initial video where I covered all the indicators, I recorded everything on YouTube, and I also recorded it with my streaming software, but the software failed. And there's actually a new video that also explains all the multi-time frame volume imbalance indicator right here. I can share the link in the, where do we have it here?
Awesome. I was going to ask you if you did a new video.
Yes.
That was an amazing video. It's a shame that the video didn't work.
I know. I also felt that way because I really noticed it myself that live stream really was a good live stream. And then I checked the recording afterwards, and then I saw, shit, it didn't work out properly.
I listened to the whole thing because it was that good, even though I couldn't see what you were pointing to.
Oh, thank you very much. That's kind of you to say.
It was nice. Thank you so much for what you're doing.
No problem at all. All right, then I'd say we get started. Again, also, if anyone else got any questions, feel free to send them in the YouTube live stream chat or on our Discord server here. All right, I'd say we get started. Let's get rid of this and actually just get rid of all the drawings. To the beginning of the live stream, I drew up the expansion range pattern basically, but we're gonna go all over this during the live stream. So let's get rid of the indicator here for a second. What's the time? It's 10:25, so the RDR range is closing pretty soon. So let's get that daily time frame analysis done quickly. But first of all, we can also check if ICT tweeted something here. I will do 1 or 2 more test streams as we approach February 7th. Okay, now, so ICT hasn't tweeted anything interesting today. We can check the news calendar. We had 9 a.m. news, US dollar news, with the FOMC member Harker speaking. At 10 a.m. we have existing home sales and orange folder. And at 1 p.m. New York local time, we also have another orange folder. So no major high impact news, at least for today. So we can just, those news already came in. More home sales than before, so that's good. All right, so let's go over to TradingView and have a look at our daily chart. Right now, we are right inside an old fair value gap. Or we wicked inside of this old fair value gap. Let me draw this up and we make it a bullish fair value gap. And here's a little trick. If you always do your higher time frame analysis and then you go down to your lower time frame and you see all your higher time frame stuff and you don't really want to see it on your lower time frame, you can simply turn off that you want to see this fair value gap on a minute-based time frame. You can do this in the visibility section here. That's what the section is actually there for. I didn't knew it, I think, for almost for 6 months when I started using TradingView. So I was really glad when I actually learned how to use the visibility section here. Okay, so above us we have a bearish fair value gap. I'm not going to be drawing them in, all of them now. I think they should be pretty obvious. So most of you guys also use indicators for that. But as of right now, what we can definitely see is that we have our previous day high and our previous day low right here. Those are the two most interesting levels for us now. I'd say for more sell-side liquidity, we could be looking at the low that we created on Tuesday, the 10th of January, at least for today. Today's Friday. Typically, I'd say Fridays are rather more volatile, so we will see how this daily candle is going to close, because as of right now, we're forming an inside bar. So we will see if we get a break above our previous day high or a break below our previous day low. So let's break it down to a 4-hour time frame. On a 4-hour time frame, let's freshen all this up. On our 4-hour live time frame, we see that we now have a fair value gap right up here, right above our previous day high that we marked up on our daily time frame. So this time we're going to leave it on here, and we're going to use the fair value gap bearish right up here. Above it we have an even bigger bearish fair value gap based on a 4-hour time frame, so we're also going to be drawing that one in. Down here, let's check for volume imbalances somewhere along this way from yesterday on a 4-hour time frame. No, nothing as of right now. So let's break it down to the 1-hour time frame. The goal is here to try to create consistency and do the same daily routine before you actually start trading with your analysis. Mark out the major important levels starting from the daily time frame. Okay, let this load. The YouTube stream is still working, that's great. Come on. In the meantime, while TradingView is loading, we can bring up DR Lens up here in our Google Chrome tab. DR Lens. Check the stats for today. So Friday daily dashboard, we see that 94% of the time we got a confirmation. 82.8% of the times that we had a confirmation, the DR rule held true. We are basically, that's 52.8% probabilities that today we're gonna have a bullish confirmation with the data over the past 20 years. 88% of the times we had a retracement into the DR. The mean standard deviation up average on Friday would be 0.5, and the mean standard deviation down on Friday is also 0.5, and the average confirmation time would be 11:35. Alright, that's for the RDR and the E-mini S&P. So now let's go over to distributions for later when we get the confirmation. Alright, so now we're on the 1-hour time frame. We could break this 4-hour fair value gap down into smaller 1-hour fair value gaps if we'd want to. We're actually going to do this quickly. 1-hour fair value gap here, but we're not going to break them down any further. Okay, so we have a small one sitting right up here too. Just so we know that what we're looking at on a smaller time frame. But in my last live stream, I think it was on Tuesday, I was mentioning the possibility that the SP500 could follow the early movement or the early breakdown that we had on the Dow Jones index on Wednesday already, where we broke below those two major lows right here on YM. but the S&P didn't follow completely. So we saw the setup, we confirmed long on the DR on the 5-minute time frame on the S&P on Wednesday before we had this complete meltdown going over into Thursday, continuing to melt down, and right now we're sort of after this big movement to the downside. We can quickly measure that from our peak to our bottom, a 134 handle movement to the downside. And usually after a big moving day, like for example last Thursday and Wednesday, we don't really expect that much to happen, especially because we also don't have news on the calendar. So we will see how the market is going to play out today. So that's our 1 hour fair value gap right here. Our high, our previous day high. Let's go back to the 5-minute time frame now. So we see this level is, let me also draw up New York local time midnight. Thursday, midnight right here for horizontal lines. Okay, now we just gotta wait for the chart to load up. The market is going to close today at 6:45, 16:55. Okay, that's when the market is going to close. So you can already imagine, or after watching lots of price action on the S&P, how this chart could potentially develop itself up until the close of the market. So come on, chart, please load. I think streaming, recording, and everything is draining my internet connection. That's pretty unfortunate, but we will just have to be patient. All right, in the meantime, while it's loading, we can go back to Google Chrome and maybe ICT tweeted something. Now 10:30. No, still nothing. We still don't have the news on the market. We will wait for our confirmation by week of the month, by day. So we're gonna be filtering specifically for the Friday here on the drlens.themaster.com if you are one of his Patreon subscribers. And so let's say if we don't specify any confirmations or any rules whatsoever or no confirmation time of the day, we see that on average on Friday the mean standard deviation to the upside during the RDR would be 0.9x to the upside or the downside, because we did not specify any of those settings right here. The median max retracement would be 0.4x, and the max extension after the median time would be 1:45 p.m. New York local time to basically hit this target. So we're gonna mark that. Okay, finally the chart loaded. Come on, TradingView. But overall, the most important level would be right here, our previous day high for Thursday. So now I can actually draw up our Thursday's line right here. Because I'd say that's what's most important right now. How bad is the YouTube stream lagging? Or the most important level would, okay, it's not lagging too bad, so that's all right. Perfect. So our previous day high would be right here. That was formed roughly during the London range, basically. So this is our previous day's high. Wednesday. Now, okay, depending if we do New York local time, previous day high and low, but according to our daily time frame, we have our previous day high sitting right here. This is our previous day high according to the daily candles. So we're gonna mark this up. Where are the levels? This is our previous day high for buy side liquidity. So we're gonna make this in a green color, and our previous day low right here. Otherwise, we will be forming an inside candle today. If we don't close our wick basically close outside of this range. So that's currently, for me at least, the most important levels we're looking at for today. We have our that's the next target for potential sell side liquidity based on the daily time frame. That's a level we drew up earlier. That's that wick slow right here. And we have our fair value gap right here. This would be FVG top. I'm gonna leave this in red. All right, I'd say for today, I wouldn't expect a movement up into those ranges at all right now because of how overall how the SP 500 moved today. Earlier before I started the stream, I drew up the most important levels, and basically what we're looking at right now would be, according to the master, a range expansion model. So far it's been working out pretty well. So if we connect those lows, we see that most of our targets throughout the day, or important liquidity levels, let's say for example our Asian session high has been taken out, and we move below our Asian session low right here, took out the sell side liquidity. Who's singing? Okay, not a problem at all. Okay, so this would be a typical range expansion model, and we see that we actually have the resistance, that we're forming some resistance based on our London session high that we took out. And again, as soon as we took it out right here, this level, let me draw it up, that's our London session high. London high, and this is going to be colored in blue, and we have our London session low, which would be right here, which would be if we are going to grab that liquidity below this level, the overall next target, if we don't get a range expansion to the upside. But according to the model, the range expand the seek and destroy liquidity, or the range expansion model right here, we theoretically should see that happen. So that's the London low. We've got those levels on the chart now. Our previous day high is enough if we draw it out to this line, because that's when the market is going to close for the week. We don't need to extend it by that much. All right, so as of right now, we did not see a confirmation. So we are waiting. Okay, that's our London low. That's our sell side liquidity. That London high has already been taken out. Another interesting level we could be looking at would be yesterday's New York session high. This one right here. And we see that we already, hang on, that we already took out our New York session high. Previous day New York high. And our previous day low is also our previous day New York session low. So I hope this makes sense. And currently, if we just look at yesterday's RDR session, we see that basically the ODR, for definitely the ADR, stayed within yesterday's RDR. So this is our yesterday's DR low, IDR low. Let's draw this back up, and we see every time we went inside of those areas before basically 10:25 every time, or let's say 10 a.m. New York local time, every time we went into those previous day RDR levels or zones between a DR high and IDR low and DR low right here, we reversed. And so far both the ADR and the ODR stayed within previous days RDR range basically. So that's also pretty interesting to see. We're looking at a typical range expansion model. So we will see if the market is going to bounce off from here and maybe close bullish, because now we could also be drawing our standard deviations according to the DR. So what we're doing here is we're going to use the IDR low and the IDR high. And then I've got a little template here. It's called DR range. That's showing me this, not this one actually. The DR range right up here. And let's get rid of those two mid levels and those two yellow lines. We only want to see the standard deviations right here. Let's extend that out. So typically now we would have all the data that we need. Now we can go back to the DR lens. Let's see how the YouTube live stream is holding up. Okay, the YouTube live stream is still holding up. That's great. So let's go back to the DR lens. We still don't have a confirmation yet. We've got all our important levels on our chart. We can mark up that the London high has been taken out. The London low hasn't been taken out yet. We just reversed a few ticks basically shy of this London low. What do we have here? European bonds, no, nothing interesting. So let's go to the DR lens. So theoretically, the average confirmation time should happen around 11:31 if we filter by the day for the RDR session for the SP 500 E-mini. The DR rule, we're not going to specify anything as of right now here because we do not have the confirmation. We could be, oh sorry, I actually selected Monday here. Okay, so 94% no, 82.8% true. We are tending to go long here over the data for the past 20 years. 88% of the times we got a return into the DR. We closed 63.2% of the time outside of the DR. Mean standard deviation up would still be 0.5. And the average confirmation time should happen at 11:35. So let's see where that would bring us. 11:35 right here. So we can mark this line a different color right here. This is the average time. We should, by that time, we basically should see that that confirmation. Let me get rid of those range expansion lines. We've got all our important levels on our chart. So overall, we could also play around a little bit. We're not going to specify any times, but let's say, for example, we see a confirmation to the short direction. The mean standard deviation to the downside would be 1.1. And if we get a confirmation long, we would be looking at 0.9. So overall, where would that bring us? Our 0.5 or 0.1 standard deviation would bring us just below our previous day low, which would be interesting. And we should see that target basically before the week's closing. So let's see. Overall, let me get rid of the standard deviations because they're just making everything a little bit more confusing than it needs to be. We've got our levels on the chart, and now we just basically have to wait very patiently to see our confirmation. Overall, we took our previous day's New York high, and the next target could be the ODR range right here, something around this level. So we could be drawing this area up as a potential resistance zone before we make it to our previous day high. And I'd say now we could also use the help of the multi-time frame volume imbalance indicator. Let's turn on our institutional levels also here, because I want to know what prices we're looking at. So we have the 00 institutional level just below us. It's pretty similar to what we saw during December. We basically just reversed a few points or a few ticks above the 3,900 key level. So that's interesting. Basically what they do here, they left behind a pool of liquidity for them to take out at a later point of time, basically. So maybe we get a pullback. Come on. So basically what we could be looking at is a pullback after our steep drop that we had basically on Wednesday and Thursday. Just back to our 3,900 level where we basically started the whole move. So let me turn off this indicator. If you remember, last week after the CPI movement or NFP movement, on Tuesday, we were hovering just around the 3,900 level. We wicked below it a few times before we had that massive rally to the upside towards the CPI movement. So let's maybe that chart's loading up and I can show you exactly what I mean. Let me drop this horizontal line at 3,900. That's our key level, our closest key level right now, and we have our 000 level right here. Come on, chart. We still didn't get any confirmation, so yep, there we go. So if you remember, that was Friday's NFP movement during the first trading week of the year here on Friday the 6th of January, where we had this massive movement to the upside on Friday with a new opening of the week right here, where we on Monday formed this peak basically, and then we pulled back just to our 3,900 key level from over here, and we've been a little consolidation below it, 3-4 times basically below this key level, until we extended the range to the upside by exactly 100 handles to the next key level, up until the CPI news came out, where we had this big whipsaw movement, and then we basically just consolidated within a range of our CPI. If we draw out those levels, we've spent most of the time up high and not just anywhere. We basically spent most of our time above the 4,000 key level, which is a 000 key institutional level. Hang on. Someone's not muted on Discord. It's all done now. So we spent most of the time above this 4,000 key level, trapping volume up high. We have been basically taking out previous day's high most of the time. So we had our CPI high, right? Oh, come on. CPI high right here. We took that out. Monday, that was the beginning of a new week. We broke back down just to our 4,000 key level, pulled back inside of our range, consolidated. Not really ideal price action to trade, in my opinion, by just looking at the sideways movement. And right around this time, we already saw the Dow Jones breaking this key level here, pulling back, and making this drop already below those two relatively important lows, or pretty important lows. So that was the Dow Jones basically already on Tuesday, Tuesday to Wednesday. So we saw that the S&P and both the Nasdaq kept holding above this 4,000 key level right here. So yeah, that's why I basically anticipated the move further to the downside. I did not take a trade based on it because I did not trade the S&P for the most time of the week, because I'm working on a different project right up here. That's taking all of my time. But we note how we specifically trapped volume above the 4,000 key level, and now we just reversed a few points shy of that 3,900 key level. So okay, that's our trap volume up high. We pulled back, and now we're basically still within our previous day's range right here, previous day high, previous day low. And we will see if today is just going to be an inside candle, an inside bar on the daily time frame, or if we actually get a range expansion, basically looking at our previous day's candle. So, I mean, what are your thoughts? What's going to happen today? Write it into the chat. So, really curious what you guys are expecting for today, looking at it from a higher time frame perspective, that we're currently still inside of our yesterday's low and high. And we haven't expanded the range to either of the sides yet. We formed our DR. We got some sort of a retirement setup if we look at the London kill zone. So we actually had a few nice trading opportunities during the London kill zone, or the ODR range. we formed our ODR high and our IDR high right here. We just wicked inside of it and got a beautiful rejection candle where we could have entered right here on this candle. To be honest, I would have placed my stop loss a little bit bigger than 2 ticks right here, because we still have this high with sell side liquidity above it. So this would be a 15 tick stop loss that would still fit within my range. I would maybe take it up to 18, if not even 20 ticks, because then I'd know I would have to exactly enter with 2 full contracts on the E-mini right here with my funded account. And then you could have targeted, ideally, new lows for a 3.5 risk to reward ratio. But of course, you'd like to take partials along the way. So my first partial profit target would have been the IDR low, maybe. If you trade micros and you enter with more contracts, would have, let's say your stop loss would have been exactly this level at 15 ticks. This already would have been a pretty attractive risk to reward ratio just to the IDR low. The next contract you could have taken off right at the DR low for a 42 tick movement to the downside before we got that complete retracement, because we confirmed bearish here. Let me draw this up. Symbols, error to the downside. We confirmed bearish right here at 405. We can look at the statistics for that with the DR lens very soon. So we confirmed bearish, got a pullback, we got our retirement set up, and we hit the, let's say, the low-hanging fruit target, which would be the DR low or the IDR low right here for a 42 tick movement to the downside. If you kept on holding this trade, or maybe missed that entry and you place another.
Just because you see the traffic light does not mean, like some dude named RV in market.
Yeah, okay, I'm just gonna mute you. All right, so yeah, if you maybe, for example, left your limit order up there, there could have been another very sharp trade to the downside. Unfortunately, we did not see it taking out the London low, so we will see if they maybe left it behind to take it out at a later point in time, but we will see how that goes. So now it's 10:55. The new hourly candle is opening up right now in the next 4.5 minutes. So we will see how hourly traders react to our most recent hourly candle, which basically started from here. So overall, if we quickly jump to a hourly time frame, please, yep. On a hourly time frame, I'd say traders would be considering this as a bullish trading opportunity. So I'd say we're gonna get more higher time frame traders, more bullish higher time frame traders into the market based on this big hourly candle. Otherwise, to maybe take out the previous day high, and if not, we might see a reversal down into our previous day low, back down to our key level. But overall, it's not really attractive to trade at the moment, but we will see how that plays out over the day. Yes, ICT did a live stream this morning, I think preparing for his, let's say, daily or regular live streams starting from February the 7th. He's going to do live streams, and he's doing a few test live streams in the meantime. So we will see. I'm really excited to watch ICT in his last year, apparently in his last year. I mean, he already said that a few times that he's not going to continue doing it, but then he still continued doing it because he's loving it. I mean, yeah, I would love it too if I would be ICT and I would basically be the algo myself and could call out levels and everything's just playing out. It was on YouTube. If you go on ICT's YouTube channel, I think he just uploaded that live stream and it's accessible for everyone now to watch. Okay, so if we look at our last hourly candle, we see that the hourly candle opened up right here. We went a little bit lower right here, so we have a wick to the downside on the hourly candle, but for the rest of the hour, we basically just went all the way to the upside. And if we break above this level before the hourly candle is closing, we basically have no wick to the upside on the hourly candle, just by trying to visualize what higher time frame traders are actually looking at and working with, basically. So we will see. You see that volatility that's already playing out in this candle, how prices are being pushed down and moving up. We've got 1.5 more minutes on the clock before the new hourly candle is opening up, and I expect some volatility to enter into the market. So if you're a low time frame trader, make sure to watch the time. ICT points it out every time. Time is the most important factor that basically makes your trade successful or not. So yeah, make sure to check the times. I think now could be now we're gonna wait for this candle to close before we bring up the multi-time frame volume imbalance indicator. So let's see if we can actually get our bullish confirmation to the long side. Overall, yeah, there's not much room to draw a trend line right here other than the range expansion trend line we already saw. So this is that's the new hourly opening, and that's roughly when we should see the confirmation based on historical data on Friday. So let's make this orange so we don't get confused. So we see a rejection right from our DR high. We've got 30 seconds on the clock. Let me actually connect my paper trading, just in case, and let's reset it. Reset paper trading account, reset. Let's see, let's watch it live how that new hourly candle is opening up, and if we see the volatility we expect with that new hourly opening. So let's see. I mean, here it was pretty obvious. We saw 8 a.m. at 8 a.m. New York local time, right here where I started. That's an hourly candle. We moved to the downside. 9 a.m. we moved back to the upside, and from 9 a.m. till 10 a.m. we basically moved both to the downside and to the upside, and from 10 until 11 a.m. we moved to the upside, forming a rather bullish candle. So we left behind a wick because that's now our opening price for the new hour. The wick has the size of this range on the hourly candle, so we will see if we can actually break above our hourly candle high. We have our new 4-hour candle. Let me use the indicator here quickly because I don't really remember it myself. 4-hourly candle opened up at 9 a.m. So we got both a new hourly candle into the market and a new 4-hour candle opening up right here at the same time, where the market basically instantly reversed. So that's a great timing. So from 9 until for the next 4 hours, and that's 1 p.m. So roughly around this time we should get our new 4-hourly candle opening up. So let me get rid of the indicator again. We're not going to need this. I think I made that point clear. Our new hourly candle open up, and we already start to see some movement. This is our previous day New York session high. We can make this maybe a dotted yellow line, yellow for the New York range right here. So we've got all the levels on our chart. This is our current high of the day, and the London Q-zone low is our current low of the day. Okay, so we see with that new hourly we got exactly what we expected. That's why I would not enter into a short or long position 5 minutes before the new hourly open. Of course, if you have a great indication in which direction it's going to go, of course, take the trade, but otherwise it's just going to be gambling. And we're not here to gamble away our money. We could have more fun going into a casino gambling. All right. So let's wait. So we have 2.5 more minutes on the clock before we might actually get our DR confirmation. If we get it, we're gonna draw up our standard deviations to the upside. and we have the 0.5 standard deviation almost perfectly matching up with our previous day high, which would be also a good pool for buy-side liquidity where they could move price through. So exactly like anticipated, a nice continuation move from the hourly traders, because as we drew it up on the hourly time frame, we saw a super bullish candle. We left behind a wick, but as soon as the new hourly candle opened up, plenty of hourly traders or hourly volume entered the market and creating this nice little 5-minute candle. That's why it's always important to be aware of the time when you trade on low time frames, especially on a 1-minute time frame, because it's so simple to lose track on a 1-minute time frame. That's why I created the importance of time indicator in the first place, because that used to happen to me. And keeping everything in check, it's just too much. All right, so let's see. Let's bring up our multi-time frame volume imbalances. The link for the indicators in the description of the YouTube live stream. Yeah. YouTube live stream is still playing, that's perfect. Not sure you realize, but your YouTube stream was live for the last few days. I'm not sure, I think I closed my streaming software. There is a 24/7 Bitcoin signal live stream going on my YouTube channel, so this might be it. So the multi-time frame volume imbalance indicator, I'm gonna send the link to the script quickly into the Discord live chat, in case you haven't seen or used that indicator so far. All right, here we go. So let's add it to our chart as well. All right, so now we already see all the volume imbalances on a 5-minute time frame being extended until we moved through that volume imbalance with price. As of right now, I don't have the confirmation conditions coded into the indicator. So, we've actually added it 3 times to the chart. It's not exactly what I wanted. It is Friday on a week we crushed it. Okay, looks like ICT just tweeted something. 16:59. Yeah, that looks like it. We have our bullish confirmation now, so we can go now over to the DR lens and do some DR lens action. But let's draw out our 5-minute volume imbalances to see what we're looking at right now. So we have lots of 5-minute volume imbalances right around our today's range, basically starting from the Asian range throughout London that we moved through quite a few times already. We held some support around this volume imbalance around the low, and also this one right here. So this could be a nice one to target later on. If we quickly, before we do that, check for higher time frame volume imbalances, maybe we find something up here. So we also have a 4-hour volume imbalance on our chart right around this fair value gap. So this could be an interesting area. Just note that it's right around 3945 level. We have volume imbalances also right here from the level we bounced off quite a few times today on the 4-hour chart. Let's check the daily if we have something interesting on the daily. Okay, we also have a big daily volume imbalances from a good time ago, right around this level. We've been pointing out this volume imbalance on Tuesday's live stream as well as a potential target opportunity. And we see that we have more daily volume imbalances right around this level, and a very new one, basically from the new switch over from Wednesday over to Thursday right here. So let's turn the multi-time frame volume imbalance indicator off. So we know when above our hourly high, we are still above our RDR. So we labeled this as a bullish confirmation. So let's go over to the DR lens now, because we can do some more data stuff. All right, so we have the confirmation into the long direction, and we had that confirmation Come on, TradingView. Pop up, there we go. At 11 a.m. New York local time. So now we can do a little bit more stuff. 11 a.m. So let's turn off those, all the other ones we've confirmed. I like to keep those two ones on between 10:30 and 11 a.m. and 11. So basically to our window right here. So we should see a median standard deviation to the upside of 1.1x. We're filtering by day for the selected day of Friday. The max extension time should be around 1:30 p.m. New York local time. Our median max retracement we would be looking at 0.5. So let's assume the DR rule is going to hold true today. Those would be the values. We should reach that max extension by 2:50 p.m. New York local time, and the median standard deviation would be 1.3x. Because we have the not range expansion, the seek and destroy model basically forming right here, where we're taking out highs and lows throughout that whole day. Asia, London, New York. With our highs, seek and destroy, taking out the liquidity for each session's high and low. So now if we draw up our standard deviations to the upside, we could be looking at a 1.3 standard deviation for the upside target, 1.3 median, which would be right up here. And right up here we marked up another level, I think the top of a fair value gap. So we could draw a box. We should see that happening by, what was the time again? I should really put this on my second monitor. So the average confirmation or the average extension time would be 2:50. Come on. All right, so 2:50. So let's do 20 minutes or 10 minutes ahead of it. That's 2:50 and 10 minutes after it. So right around this time, we should see this target being hit. So that's our overall stat target, I'd say. And most of the times we get a pullback to a 0.3 standard. So we're going to do that as well. So 0.7, I think I have to go then. Nope, 0.3. 0.3 retracement. So this should be our max retracement we should see for the day. So I'm also going to be drawing this up. Let's go from the opening, rough area. That's our median max retracement. Let's get rid of this fair value gap right here and those levels. We have our target roughly. We're going to be coloring this in our green take profit or our DR lens target. You can tell me if I did anything wrong using the DR lens. So yeah, I hope I didn't. So let's write a little note in here. DR lens target by roughly this time. So that would be the price. Let's also use a price note, a price label right around here. This would be our DR lens target by the time of 2:50 p.m. right here. So this would be our target right around this time, and our retracement until we hit this target, our max retracement, we would be looking at right here. So we do this, our retracement color is going to be yellow. Let's do it in yellow. We had our confirmation right here. So we could be looking at this area for a potential bounce, roughly, and this as our data-driven target. So we saw that we had our bullish confirmation and we got a retest of our 1 hour candle high right here, the high of the most recent 1 hour candle at 10:30. We retested that. We did not get fully back to our DR high basically. So yeah, we will see what we're going to be looking at. So we touched the previous day high, which would be the general buy side liquidity pool. We're now, remember this area right hand side here is a higher time frame, a hourly fair value gap that we are looking at. We already moved through that area of resistance that we drew up earlier. So right now everything's looking bullish. Let's see if we can actually get a close above yesterday's high for a possible range expansion to the upside. So far, the total range for today, measuring from our low to our high, is 36 handles or 147 ticks. It's nothing spectacular, so we will see if, let's say we got a small daily candle here or a small daily range. But after a drop like we had on Wednesday and Thursday on the SP 500, I wouldn't expect anything else other than that. So we will see how we are going to finish this weekly template. I was talking about the weekly template during last live stream. And I exactly pointed out what I'm going to basically look for this weekly template. If you can remember it, the recording for the Tuesday's live stream here on the SP 500 is also on my YouTube channel. If you guys are curious, you can watch it. I've been talking about the weekly template, how the week is basically set up. Right here, we can watch the previous day high. As of right now, we're getting rejected from it. So we're just gonna wait here. We would wait for a retracement anyway. The weekly template, I drew it up during the last live stream. That's the template I'm using basically on a weekly basis when I'm starting into a new week, because every week roughly looks the same, and I'm really trying to look for consistency for my chart analysis, because if you go to the chart every day and you don't actually know what you're looking for and what you're doing or what you're expecting for the bigger picture, how the week is going to set up, what areas of liquidity it's going to target and run for, yeah, it's going to be really hard to become consistent. And consistency is, in my opinion, a major key to reach your goal of profitability, especially long term. Short-term profitability is pretty easy to obtain, but staying profitable over the long run, that's the hard one. That's the challenge. Just because you pass one funded account challenge doesn't really make you profitable. All right, so basically what we're looking at here is how our total week so far. We had our previous week's high right here. So we're going to be noting that down as our previous week's high. We're going to make this in, yeah, let's leave it in yellow. So we basically open up our new week starting at Monday right here, Friday, Sunday right here. That's when we open up our new day or our new week here, according to not New York local time, but general time. So come on, let's text. There we go. Okay, so that's Monday. On Monday, we basically formed our initial balance. So we would be going over to Tuesday now. Let's do it at 6:45 when our daily candle closed here on Monday, just not according to New York local time. 16:45 Monday. So that was our new day. The switch over because Monday was a US bank holiday after CPI on Friday. So this was a US bank holiday. Let's write that down. That's also important. US bank holiday. Make this also in yellow. That was a US bank holiday, and we saw that we took out, that's our CPI high, and that's actually our previous week high right here. I made a little mistake there. That's our previous week high, and every time we went above our previous week high, we basically got rejected immediately. We have our initial balance basically forming around. Let me get rid of the 000 level. You guys just should remember that a 000 level, 4,000, 5,000, 6,000 are key institutional levels to always have on your chart. But basically what I want to do today is also again explain the model of the opening range for Monday, because Monday always begins with the new week. So this is our opening range for Monday, creating a new high and low for the new week that's currently forming. So we're going to make those lines in orange. That's our opening range, those two lines right here. So we saw that going over into Tuesday. Tuesday would be right 8 here, right here. That's when Tuesday started. So right here, Monday I always label as opening range for the week. That's our opening range with those two orange lines. So we saw our opening range, if we draw it throughout the week, how those levels are respected. So we took out our Monday's high basically on Tuesday. Most of the time we spent inside of our range created on Monday right here on our opening range. We consolidated until we had this massive push to the upside above our previous day high, because up until there, Monday, Tuesday, so Tuesday, previous day high, Monday right here, we took that out and got a sharp reversal back into our range. And now we have a day 2 initial balance. And typically, hang on, initial balance, let's make this a capital letter. Let's color this one in baby blue. So on day 2, we usually create either the high or low of the week. So the probability is very high that either on Monday or Tuesday, we're gonna actually form the high or the low for the week. Of course, you're not gonna know in advance, but it's just there. So if you see a setup like this, of course, don't trust me with what I'm saying here. Test it yourself. Draw up your opening range, and then see throughout the week how those levels are being respected. So on Tuesday, we basically formed our high of the week right here. This level has not been taken out. This is our current weekly high. So we're gonna label this as CVH. Also make it in baby blue. And yeah, basically went back inside to our range. Opening up on Wednesday right here. That is Wednesday, not according to New York local time, but when the daily candles are opening up and closing up, we saw that we moved below our opening range low and immediately saw a rejection. And then we had a very early pump during the Asian kill zone, basically here at 9:40 p.m. New York local time. We had this massive move back above our opening range and our previous week high, but we did not close above it and immediately pulled back inside of our range. So this whole range model, if you think of the market basically ranging within a box, it gets pretty simple. So what they're doing right now above the 000 level is trapping volume up high, trapping daily breakout traders above a previous day high, trapping them long into the market to accumulate shorts, because if a big institution wants to build a big short position, they need enough traders that are taking the other side of their trades. That's how this whole trading game works. So they have to make it look like the S&P maybe likes to continue up higher and trap traders into the wrong direction. So now we are over on Tuesday, theoretically Wednesday now, New York local time, Monday, Tuesday, Wednesday. We went back to our previous week high and our opening range high. We had our current week's high, our initial balance high, basically right here. And we respected this level. So Tuesday formed the high of the week. So no, I didn't want to do that. And then again, we saw some consolidation. I think we had a bullish confirmation on that day. I'm not quite sure. No, that was the live stream on Tuesday where we had this pretty weird RDR, we should have seen a upside expansion model right here. That's a typical upside expansion model. ADR, ODR above the ADR, and RDR above the ODR. So this would be an upside expansion model. But because of the bigger picture, this didn't play out. We had our CPI news high right here. So trapping volume every time we go above those important levels. So let's see. We broke down, and I think I ended the live stream somewhere around this time, and someone mentioned that, oh, we already hit our RDR max standard deviation to the downside, so I'm gonna be looking for longs now. And yeah, well, I mentioned out before I left the stream that this level right here and those levels are likely to be target or taken out by the time the daily candle is closing. And we got our daily candle close right here at this time. And we actually took out, went all the way down till this level right here. So we took out all this liquidity, basically doing exactly the same thing that US 30 or the Dow Jones already did one day prior, because on the US 30 or Dow Jones we got something like this. Broke below this level, pulled back, and had this crash to the downside already one day earlier, giving you some sort of indication of what's going to happen on the S&P and NASDAQ. Because it's pretty unlikely that we see such a decoupling of all three indices. Alright, so we had this massive drop to the downside after trapping volume up high inside of a consolidation box above the 4,000 level. Massive drop to the downside, basically forcing all the traders that are still long up here to liquidate their position, depending of their risk management. And after this big drop, we went into Thursday right here. That's New York local time Thursday. That's when the new session or the new daily candle is opening up. Going into our new daily candle, forming the ADR, ODR, and RDR. Theoretically some sort of a, no, not really a downside expansion model, but again a nice continuation further to the downside. Now we have our previous day low right here and our previous day high right here, and up until 11 a.m. New York local time we stayed within our candles range, and as of right now we still really haven't closed above our previous day high. So this level is actually looking seeing some resistance here, but we will see how that goes and how that turns out. Right now it is 11:25. I've got roughly 1 more hour left to stream. We could be looking at a fair value gap to hold support here right there, and we have another fair value gap right here, which could help us for a DR bounce. But we will see how that's going to play out, because remember we have a higher time frame fair value gap right inside here, a few volume imbalances, but overall I'd be patient. We'd be looking ideally for a retracement back inside of this range, but if we are taking out our overall target would be right up here, our DR lens target for Friday would be up here. So theoretically we would like to see the consolidation below here, ideally not a close above it, our pullback either to the DR range or the continuation into our average or mean pullback into the DR range of 0.3 with a massive impulsive move to the upside, maybe pulling back, filling some fair value gaps right up here. So I'm not sure, it's up to everyone's decision or analysis if you could see a pattern like this forming, or if we're not just going straight up, right up there. It's Friday. We had a few nice trade setups throughout the whole week, so I wouldn't feel the need to force a trade on Friday typically. Overall, I mean, looking at the week, you got way better trade setups on the Dow Jones because we did not have this whole consolidation day. right here on Tuesday, looking at our opening range initial balance model right here that we broke out of. This would have been the scalable, repeatable trade setup for the week. This drop to the downside could have been anticipated. Right now, trying to scalp a few ticks here and there, of course, profitable, can be profitable, but yeah, that depends on your strategy and your trading plan, if you have one ideally. But overall, we had a pretty sharp ascent here to the upside. We're still getting rejected from our previous day high, which is interesting. We will see how that's going to play out. I think I saw a few questions in the Discord chat. The I think indicator is locked. I can't find it. Yes, you click on the link I sent into the group, into the Discord live channel, and then you go on to, you end up on this page right here. And then you simply add it to your favorite indicators right here, because I already have it added to my favorite indicators. Yeah, here, just click on this button basically, and then open up TradingView, click on reload or duplicate tab for the whole chart to refresh. And then inside of your favorite section here, inside of the indicator metric and strategies, you should find the MTF, volume imbalance indicator by EFAMED. All right, so we continue going further to the upside. So this fair value gap could have been a nice play. Maybe someone took it. We will see how that's going to play out. So we see momentum keeps picking up. We can, there was another question. Seems off should be 0.9. Why should it be 0.9? We can go back to the DR lens. Let's go to the DR lens. So we have filtered by day, selected day Friday. We have our confirmation time of the day right here between those two times, because we had the confirmation exactly at 11. So we could maybe get rid of this one, but still values don't really change. We have a long confirmation. If I'm going to all, let's say we're not, you should see a 1.1 median standard deviation to the upside. If I go over to false, we should see 0.7. If we see true, we should see the 1.3. So I'm not, please advise me if I'm doing something wrong here. But overall, yeah, 247, that's still right. I see. IVE, the rule on all time frame from 11 to 11:30. Is the stream live on YouTube right now as well? Yeah, the stream is live on YouTube at the moment as well. I can post a link into the description of the Discord quickly. Right here. So yeah, now overall I'd say we could, right at this one right now, not this one, from 11 to 11:30. Let's get rid of this one. And we see the medium standard deviation to the upside would still be this one. I'm not sure how I'm going to be using the DR lens data, because I don't want to base my trading solely on the data. Of course, having 20 years of backtesting data is insane. But yeah, I'm still deciding how, in what extent I'm going to be using the median standard deviations to the upside and stuff like that. Because just because that's the median standard deviation to the upside does not mean that the algo is just going up to the standard deviation and then reversing by that time. Of course, sometimes it can really work out, but well, I'm still deciding. Deciding on that. Overall, I think I'm not gonna go. It's nice to set targets, basically. We will see if we can reach that target by that time, or very likely already earlier. But now we got our close above our previous day high. Looking very nice. Let's have a little comparison between all the US indices. And I think I saw another question earlier I seen you had the USD JPY chart in the beginning. Do you use in same order DR IDR for forex pairs? No, I do not. I don't use the DR IDR concept on forex pairs. I only use it on the S&P 500. I trade forex manually with a bunch of my own indicators. And yeah, I like the way USD JPY has been moving for the past week. And yeah, very nice, clean structure, ABC patterns, very simple to trade. All right, so let's open up our comparison chart. We need three. Come on, am I blind now? Yeah, there we go. ES1, we're gonna go for NQ1 and for YM1. All right, so let's do a hourly comparison. No, therefore we have to sync the interval, the time with the layout, and also the date range. All right, so overall, if we compare all three charts, we saw that we had bullish divergence if we compare all three indices. I hope everyone sees that himself. We made higher lows on the S&P 500. We made higher lows or moved along this trend line here on the NASDAQ 100. But on the Dow Jones, we actually already went below our previous day low, giving us a small hint for bullish divergence, or at least a nice indication to actually take a trade on the YM, since they already took out the buy side, the sell side liquidity below the slow. They didn't do it on the S&P 500. So once the sell side liquidity pool has been rated below this previous day low right here from Thursday, there's strong confirmation that the next target they're gonna reach for is our previous day high, which would be Thursday. That's New York local time. I think also somewhere around that level. We could be using a simple tool here quickly. Highs and lows. Highs and lows. Highs and lows. Show previous day high low. Show previous day high low. Oh, come on. Show previous day high low. Interesting. On the S&P, we are also just shy of our previous week's low right here. So this is our previous week's low, which would overall, I'd say, in my opinion, be the next target after this major drop to the downside. So we're above the previous day high on both the S&P 500 and NASDAQ 100. We didn't get quite up there yet on the, the Dow Jones index. So we will see how that's going to play out. That's actually, as of right now, yeah, now we went above this high. We also went above the high right here. Actually hasn't been a significant high. So we have the difference. Overall, I'd say all of the indices confirm bullish. Let's go down to a 15-minute time frame. So on the 15-minute time frame, we still have that overall divergence. Let's see if we had some divergence between NASDAQ and the S&P right here around this time. It very much looks like it. So on the S&P, when we formed this low right here, now we also did not break it, but we got really close to it. And on NASDAQ, yeah, we basically rejected off that trend line. On the Dow Jones, the Dow Jones been off for basically the whole week, not really lining up with the price action that we saw on the other two US indices. So I'm just going to close it. That divergence to the Dow Jones is noted, I hope. So overall, no real strong divergence or SMT divergence we could be looking at between the US indices, between NASDAQ and the S&P, because they've been correlating more actually than the YM. The Dow Jones already had the drop like mentioned. On Tuesday, we went above the CPI news high. We opened up the new week, and we did not break Monday's high on the Dow Jones, but on all the other charts, we see we did break the Monday's high on Tuesday, forming our high of the week. And right here on YM, we already made this drop to the downside below this low and this low on Tuesday. We did not do this. We did not drop below those levels here on Tuesday on the S&P, neither did we do it on NASDAQ. It took us one day to get down to this level, and the YM basically just tanked right here. I mean, if we look at a higher time frame, we're already back down to almost hang on. Yeah, we're almost down at our pre-NFP level, pre-NFP low right here, which is also the December low that we formed right here, or January, this month's low. So we could be looking forward to actually take out the low of the month of January. No up close candle for this month. Okay, we're starting to see some rejection across all three charts. I think that was enough comparison between the US indices. Let's go back to our 5-minute time frame. We could be looking at a nice candlestick formation with this bullish candle to the upside, a doji, a indecisive candle, and a nice bearish momentum candle back down. Maybe just filling the fair value gap, but this could be a potential peak formation right here. Just looking at the setup. Could you please see the settings on the high-low indicator? Just using show previous day high-low and show previous week high-low. Nothing else. I mean, everything else is basic settings. Very simple indicator I called it once, just to make life a little bit easier. Okay, so if we engulf this most recent bullish up close bullish candle right here, let's not count in that doji. We could be looking at a nice reversal right above our previous day high as soon as we rated this liquidity. If we break it down to a 1-minute chart, what could we be looking at? So we see on a 1-minute chart how we had those consolidations every time before we made our next move to the upside. So our most recent swing low and swing high would be this level right here. If we break this, we would look at a market structure shift. Our most recent swing high would be right here. We also have equal highs to the upside. Just looking at market structure here. For a maybe potential reversal. I know, of course, we have a bullish confirmed DR and we have our DR lens data. But if it would be right every day, I think there would be no need to watch my live stream or to pay for a membership if the DR would work every day. It's just my opinion. It's definitely a great tool to help you throughout your day to look at price on the whole chart in a specific and uniform way, which brings in consistency, which is necessary for every professional profitable trader, in my opinion. The consistency, looking at the same thing or the same models every day to basically, to base your bias for the day. So yeah, in that point of view, it's a great tool, but overall, I wouldn't put too much emphasis on the DR lens. Personally, if you found awesome trades with the DR lens, then feel free to send the trading view screenshot into the Discord live chat. I'd be delighted to see it. Because I haven't seen it. Alright, enough. And if no, okay, I'm gonna stop about it. Alright, we have the bullish confirmation. We've been working on our way further to the upside. Let's see if we get that market structure shift. Looks like we're gonna get a drop to the downside. We have plenty of 1-minute volume imbalances, so that's not really something we would be looking at. We formed a nice peak formation, that's for sure. A sharp move to the downside. So we'll see how we go from there. We're just above our previous day high and our fair value gap top. So we filled in this hourly fair value gap, which is also a potential reversal zone for us. Our overall target is still up here, and our rough median retracement target inside of the DR, according to the DR lens, would be right around this level, right around our London high, which would be 3933. And our target would be 3968. I know it seems a little bit off. I mean, we can already check. I think we already hit the 0.5 standard deviation, going from our low to our high. 0.5 standard deviation, as we mentioned previously, almost perfectly lining up with our previous day high, which would have been my overall target if I would have gotten into a trade today on Friday, somewhere off the DR level or after this consolidation, fair value gap. But other than a scalp, not based on many rules, maybe fair value gaps, but no, nothing repeatable that you could actually repeat with consistency every day, in my opinion. Of course, you can make money with it, with this move to the upside, but nothing, like mentioned, repeatable. And that's what it boils down to. If you look for profitability, consistency, and all the yeah, your trading goal, basically. All right, let's see if we continue to break this level. Could be looking at a potential market structure shift up here. Interesting. Again, if there are any questions, feel free to send them into the chat. I'm also going to check the YouTube live stream chat now. Okay, there are no more new questions on the YouTube live stream chat. And on Discord, yeah, please ask the questions. And we have something to talk about while we wait for price to give us any indications. I actually want to look what USD JPY did today. In the meantime, until we get the question. Well, yeah, in my opinion, that's not a, at least for my trade setups. Of course, if you have your trade setups, a repeatable, this wouldn't be, maybe on a 1 minute time frame, this wouldn't be a repeatable move for me. So yeah, it's, for me, it's not a repeatable setup. I look for setups that I can identify live. I'm not trying, I want to see a clear setup. For example, a market structure shift, a pullback inside of a fair value gap to roughly above the 50% level, and a continuation lower. Those setups are predictable, scalable, and live executable. I'm not looking to scalp a few ticks in here because the market's dropping and suck, and then I'm getting stopped out on this whole movement and ending up with 20 trades throughout the day. That's not my target. I'm looking for 1 or 2 best trade setups throughout the day, and if I get them, I take them. I can also see them and execute it live on a 1 to 5 minute time frame, and that's just making the whole concept of trading a lot more stress-free for me. And I can actually treat it like a business and not like a little hobby that I do on the sidelines to have some fun watching a chart. No problems at all. How do you know which ticker to pick for divergence? That's a great question. It's pretty simple if you do it with, for example, a really US dollar correlated pair. So let's, for example, do the Euro US dollar pair. I know it's not really a question you ask, but it's gonna help me explaining it. So let's add the DXY here using the compare symbol function. And we invert the scale, and now we can basically compare highs and highs and lows with lows of the DXY, and we see that in a perfect world, all the lows and all the highs on a highly correlated pair should match up. That's at least the way ICT explains it in his video. So we see, of course, we flipped the chart right here, we inverted the scale, but overall, all those highs, nope, all those highs and all those lows should be matching up, and we shouldn't see any differences between those levels. We saw that we also made a lower low right here, and also right here on the DXY. So yeah, it's a tricky question to use the same principle with the SP 500, NASDAQ, and YM, because you're now looking at more than two assets. Of course, they're still correlated, but for example, YM left the chat for every correlation decision basically on Tuesday with this huge move to the downside. And I'd say for this week, it would have been pretty simple, just looking at the S&P and NASDAQ. I'd say it really much depends on your trading rules. I'd say if you've got your trading rules, and for example, I think I saw the Phantom ICT on Twitter posting a strategy around the New York Open where he's looking for divergences between NASDAQ and the S&P, specifically at this time. So for example, if he would have seen a drop below our 5 a.m. low, below our London kill zone low basically, on the S&P but not on the NASDAQ, he would use that as an information for bullish divergence, that they manipulated the S&P below sell side liquidity to fill in a few more orders and to liquidate traders that are currently long already in the market for a bullish divergence, bullish SMT divergence trade to the upside. But it really depends on your rules, though. The rules have to be given. Otherwise, you could be looking at bullish divergence here and at the same time at bearish divergence there with three indices, basically. Hope that helped that question. That answer. So let's see. Continue forming higher lows. Let's see if we can break through above this high, which would bring us closer to our overall target. I think it's really unrealistic. So we will just see how Friday is going to continue. Let's see if there are any other questions. So yeah, overall for SMT divergence, I love doing it on, for example, pound US dollar and euro US dollar, because it tends to work pretty well if you compare major lows or key levels with the chart, maybe not on a 1 minute time frame, but on a 15-minute time frame, and you see, for an example, we had relative equal highs, we had the same ones here, we had this pullback. There hasn't been a significant divergence. We made lower lows right here. No good examples as of right now. Here would have been a very, I think that was the CPI Thursday. No, it wasn't CPI. That's during December. But a great example for divergence, or basically for the whole SMT divergence concept, which could be boiled down to manipulation on one of those correlated assets. Because in a perfect world, we should have seen that same move on the DXY as we did on the euro, but this would indicate us that this move to the upside was a manipulated move. And now looking at a lower time frame, we could be looking at a potential reversal opportunity short to take out, for example, sell side liquidity below the current day's low. Getting short somewhere around this level within this 15-minute candle, or still here for a low hanging fruit bounce trade below this low, could have been pretty simple. And doing the same with the indices is pretty hard, all depending on your rules. And yeah, like always, rules are pretty much the most important thing. They can allow you to actually trade consistently. And I'd say on the way to profitability, next to risk management, consistency is one of the most important core values that you should have to actually become a long-term profitable trader, not just I passed this one challenge and failed it 2 months later, and then since then I'm struggling and blah blah blah. So consistency, trying to create a routine and leaving that thought from not looking at trading as a hobby anymore, actually taking it serious and looking at trading as a serious business. Because if you want to become a full-time profitable trader, it's not going to be a hobby anymore, it's your business. You're actually going to live from what you're doing there, and you don't want to, in my opinion at least, gamble or risk your money on setups like those. Of course, could potentially work, but scalping on a 1 minute time frame is risky. 100%. You'd be looking for scalable, repeatable setups that you can also execute perfectly on a low time frame or high time frame, whatever you prefer trading. And it's not what everyone else is doing, basically. Just because everyone's now trading on a 1 or 5 minute time frame doesn't mean you have to trade on a 1 or 5 minute time frame. You have to find out what works best for you. If you can't handle all the emotional struggles that are going on within you while scalping on a 1 minute time frame and seeing if you trade full contracts being a drawdown with a few $100, for example, just with a very small movement, and you closing the trade, making impulsive decisions, then at least for right now, the 1 minute or 5 minute time frame is just not the ideal trading environment for you. And there's nothing bad about it. I mean, if you make profits on a 1 hour time frame, go for it. It's ideal. It's everyone's goal. If you make profits on a daily, 4 hour, 1 hour, 15 minute, or even 10-second time frame, who cares? In the end, all that we care about is becoming profitable over the long run. And that only works with consistency, because how do you want to become profitable over the long run without consistency? Otherwise, every trade is basically gonna be random, created out of a mix of emotions and feelings, basically. So calm, clarity, and consistency. And consistency is next to risk management. And calm, I like that. And clarity, one of the most important values a trader should have. Not a hobby trader. That's why I want to make that's why I want to draw the line between looking at trading as a hobby. Okay, I like sitting in front of the screen and I like the idea of making huge profits and blah blah blah, but actually making them consistently over the long run, there's a big reality gap that needs to be filled there. So let's go over to the comparison chart. So we see that the S&P again is below our previous day high again. The Nasdaq is still holding up relatively strong. Let's look at the YM. YM didn't even reach above its previous day high. So overall, we could be looking at a potential market structure shift here with some sort of for the pattern traders out there, head and shoulder pattern with a neckline that looks something like this. That could be broken to the downside to maybe pull back into our DR range for a potential reversal again to the upside to take out our equal highs and close somewhere around, I don't know, somewhere around this level. I don't think we're gonna be targeting this level all over here, but I mean, we still have plenty of time looking at price action and volume that's entering into the market. But I don't unless prior to the New York Open right here at 9:30, we did not have a very significant liquidation event. So everyone that basically hopped in on a higher time frame into a long position is still running in profit. Of course, if you would have hopped in already here and had your stop losses somewhere around those levels, or even here at the current day's low, you wouldn't have been taken out. So overall, we will see how that's holding up. This little head and shoulder idea, we already see that we sort of hold some support here, but and if it's pattern trading that you prefer doing, keep doing it. Pattern trading is also a tool that allows for consistency. Of course, it's open for interpretation and it's very subjective, because someone's going to see the pattern here and someone else is not going to see it. So it's really up to the spectator. But the DR IDR concept, on the other side, allows for consistency, because everyone around the world looking at the same chart on the CME centralized chart is looking at the same prices, the same ranges, and everything else around the whole world. So everyone's looking at the same stuff. So they see the confirmation short they now have, if that's their consistency, if those are their trading rules, they know, okay, they're going to be looking for short today. They're going to be risking 2R for the day. They have their important liquidity levels drawn out. They know the rough concepts of expansion to the upside, range expansion, or basically that seek and destroy movement with that broadening or opening wedge right here. This sort of movement that we saw up until the New York breakout, roughly. So yeah, those tools allow you to actually get more consistent, but then you also have to only do stuff that matches your rules, because what I've done in the past most of the time was taking trades here and there, and over all my winners or all my small losing trades cancel out all my big winning trades once I hit it, and I just lacked in consistency. I could not tell anyone what it actually is that I'm doing. So that's where everything changed, and yeah, for the good thing, or basically the good way.
Those?
Someone's
emails.
talking.
So you know at work,
Oh, work.
I was figured you were kind of looking at it.
All right, so so sorry, I can see the settings again, please, on high lows. Mine looks different than yours. Patience and discipline is everything. 100% discipline. And discipline is way easier if you have rules to stick to, basically. Yeah, consistency. The settings on the high and low. Are you using the same indicator than I do, as I do? Highs and lows by Ethernet. That's also a private script. I think I shared it on one of the YouTube videos. It should be looking like this. Highs and lows. Show previous day high. There's not much you can actually do unless you go into the source code. You can only show the monthly high low, the previous week high low, and the previous day high low.
Mine doesn't have lines. Mine has like some weird, it still has those circles clicked, but I don't have the lines that you have.
If you go over to the style section, do you also have select circles here?
Let me see.
This could be the only difference.
Going to style, oh, hang on a minute. Circles are yes, but I don't have my highs and lows. They don't look like yours.
Check the background color or the color of the lines too to match your background color.
Okay, so let me do it on a black background.
Yeah. All right, so we're still inside here. Let's see, our next hourly candle just opened up, 12 a.m. So now we've got lunchtime. It's lunchtime up until 1 a.m. So we will see. Maybe we get a nice setup after lunchtime, New York local time. Let's go to our 5-minute time frame. See what we're looking at. All right, we had a nice expansion to the upside. Started to fill in this fair value gap 2 times already. New hourly candle, next hourly candle, 2 p.m. And that's when we should roughly hit that target according to the DR lens. That would have been the retirement setup for the ODR. And I wanted to check USD JPY. Interesting. Okay, we filled in this fair value gap almost to the tick completely right here. We're starting to see some bullish momentum coming into the market with the new hourly candle. Nasdaq is currently, I'd say, the strongest index out of all three of them. Relatively speaking, looking at the highs. So we will see what we get with that new hourly candle. We have our hourly high right here, our most recent swing high basically on a 500 time frame, and our hourly low right here. So after all, if we go over to the hourly time frame, another super bullish candle that went followed by this bullish candle that we looked at 10 a.m. where we anticipated lots of bullish momentum or higher time frame traders to enter into the market after seeing this bullish candle. We got our next hourly bullish candle, and now we see if this momentum can continue to maybe reach our target up here or go through our hourly fair value gap. 4 hourly fair value gap. Here would be the hourly fair value gap top. So I could see it continue going up higher, but I could also see the seek and destroy pattern that we basically formed today, taking out liquidity both to the buy side and sell side, and maybe reverse back down to the previous day low. We will see. I mean, it's pretty much the end of the week. If we're gonna get a reversal setup or a continuation setup overall. Looking at the DR, ideally, we'd be looking for maybe a pullback to the DR high or to the 0.3 retracement back inside of the DR according to the DR lens data. Let's open up the DR lens. 0.2 median max retracement. We should hit that target by 250. So that's still valid, everything. Let's see if the inner circuit tweeted something new. The numbers and day 1 of 90. See, I miss sometimes high resistance liquidity runs. This concludes this week with good old ICT. It's Friday, new week, so he tweeted something an hour ago. Let's watch it actually. So look, pretty much similar to what I did with the DXY. He also got the compared symbol on his chart where he's doing his live executions. Someone doesn't have his microphone muted. Who's that? Well, I can't find you right now. I'm just gonna mute my Discord so it's not gonna be annoying noise in the background. So ICT entered based on this fair value gap right around 940, 950, right around this time. And at the beginning of the video, we saw that he had right here, right around this time, I think, Yuda swing fake drop to the downside. And he opened up his Nasdaq comparison chart to look for SMT divergence. Yeah, SMT divergence because NQ did not fall lower. Okay, let's stop this video quickly. Stop loss under the order block plus fair value gap. If I see this drop as a Yuda swing, higher incoming and potentially a rip up to 3945. Second partial above here. High resistance liquidity runs, frustrated. Housing numbers due out in 1 minute. Expect some energy in price on that smoke. Offered smart money a discount before launching. And again, he pulled up the Nasdaq. There we saw it. SMT, bullish divergence. Entered with another contract right here. continuing rally up higher. That's that new 5-minute or that candle we've been looking at with the new hour opening up right here, 10 a.m. and boom. Another bullish fair value gap, the one we've been looking at right now. I think so at least. Doesn't appear so. Stops right before higher. I won't trade my stop loss. Next fair value gap. Stop under the fair value gap low right here. So he's trading up his stop loss step by step. Buy side liquidity. Interesting. That's perfect execution, but you gotta get to a stage to take this on a 1-minute time frame to perform live like this. It's insane. It's a different level. That's 20 years of experience doing this stuff. 20 years. All right, pretty beautiful. Nice price action. Overall, very good on you, ICT. It's Friday on a week we crushed it technically and everyone wants to short. The market created a Judas swing lower on the opening at 9:30 a.m. ET. The algorithm will seek buy side liquidity study. 3945 booked, but without ICT. I see I missed sometimes. Day 1 of 90. The numbers. Not bad, not bad. Paper trading. Good on you. 53 minutes of trading and a nice amount of profit, 9 grand of profit. That's ICT level. All right, so at 9:30 the open, yeah, so you basically looked at this drop to the downside, and if we compare that to what we saw on Nasdaq at 9:30, we saw that he considered this a good enough SMT divergence, even though we did not break this low of the 5 a.m. low basically right here. Let's say, for example, we would have broken that low, we would have seen that SMT divergence. Just imagine that wick would have been only this long here to the downside. We would have seen that SMT divergence, and this would have been his confirmation for the algo to actually kick in and go into buy mode. And then by simply looking, could have also used 5-minute fair value gaps and 5-minute structure, but he did everything on his 1-minute time frame because everyone wants to see the market continue to drop, because that's what the market did yesterday. Yeah, pretty interesting to see what ICT did. So if you're at ICT's level, then yeah, you can see profitable, scalable, repeatable trades in here, but I'm not ICT. I'm not trying to be ICT. I'm learning the concepts and doing paper trades with it, but not on a 1-minute time frame. I used to do that. It didn't work out very well. So yeah, it's practice. I'm not expecting to do exactly that something or perform like ICT performs after 1.5 years of ICT trading experience. Yeah, ICT is awesome. I'm really looking forward to February the 7th when ICT is going to start doing live streams on YouTube again. He's not going to call out the levels. He's not going to do the job for you. He's teaching, watching price and calling out levels. So we see some sort of SMT. We took out the 1130 high on Nasdaq, and we didn't take it out on the SP500. I have to get going soon. Going out for dinner today on Friday, so this will very likely be the end of the stream for me. I'd say watch the ICT video on YouTube that he or the test stream with no audio, and maybe try to look at what he tweeted on Twitter just before, and try to do the whole analysis that he did while being in a live trade in replay mode. And if you have TradingView Premium, you can actually use the buy and sell functions while being in replay mode. But just to see if you would have seen it as well. Of course, after watching the video, yeah. But yeah, the hard thing is to actually go long after a sharp drop like this to the downside. Because I know that most traders or most beginner ICT traders would be looking at a market structure shift and pull back into a fair value gap optimum trade entry short. So yeah, I guess that's experience. And other than that, anyone wants to take a screenshot of the DR statistics for the rest of the Friday, you can do that right now. Confirmation long, confirmation between those 2 days. We filter the data by Friday. Here are the median standard deviations and everything. I can also show you the stats for all right here if you want to see that. But other than that, I have nothing more. Of course, if there are any questions, now is the perfect time to ask the questions before I end the stream. Just send them either into the YouTube live stream chat or the Discord chat. And yeah, I think someone asked earlier what a consistent trader has or what it basically is. Maybe some of you know that I have my own trading community, basically teaching beginner traders or intermediate traders how to trade more consistently. And I've been doing so much work and trying to help, but I think so far by creating indicators and stuff like that, and I made the decision at the beginning of this year to step up the game a little bit because yeah, I can show a few examples right now what I'm working on. I'm working on a website, or basically on a trading calendar for traders, also a journal and a checklist, for example. The idea behind the checklist is basically if you're working in a business already, you should be aware of what an invoice book is. So an invoice book is basically every time you make a sale or something within that business, you have your invoice book and you give one side of the invoice to the customer, and the business owner also keeps one page within that invoice book, basically to make it easy for himself at the end of the year. And if you look at trading like a businessman, or you look at what you do with your trading as a business, I think in my opinion it would be great to have a checklist where you can go through step by step. So for example, the way I'm imagining that checklist, or how I'm actually using it myself, I've got the first question on there: what is the time? And then you look at the time and you have your checklist. Okay, is it outside of my trading rule or outside of my time window? Then you've got question by question that you have to fill out like an invoice book before you actually take the trade. Now you're in the trade and you've got some more basically on your invoice book for traders, more options to, for example, how did I manage the trade? Did I feel emotional about the trade? Did I make a mistake? And so you basically have, for example, 100, 200 pages within your invoice book, and every trade is going to be tracked now properly. So that's, for example, the checklist. And then by the end of, once your invoice book is full, you get a new one. And yeah, you've got all your trades basically written down like a proper business in a invoice book sort of style. That's the idea, to basically help you become more consistent. That's the whole idea behind the consistent trader. Also a trading journal, which is pretty similar to the checklist, but more an alternative to the calendar. I've got one of the calendars hanging up on my wall already, a little alpha of the calendar, because I love to write things down on paper, and especially while teaching my community of beginner to intermediate traders, so oftenly I got the questions, oh, what happened today? Candle dropped by 100 pips, or Bitcoin rallied up by 2 grand or something, because they did not, or they were not aware of the news. Of course, you can check Forex Factory every day and you can write it down on a piece of paper, but I always, again, bringing it into the business perspective, trading basically. Every business has a business calendar where they write down important events, like for example, if they have to go to a business meeting or blah, 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 whatever is important to your business basically. But for trading, one of the most important things are major high impact news events. And if you're not aware of them, I mean, yeah, it's not really ideal. And having that calendar right in front of you or on your wall in your trading office or in your office, in your business office for trading, already helped me so much. And being able to draw in my daily PL, and for example, like in this example here, not sticking to my rules, perfect execution, NFP Fridays, paper trading only. It's a nice visualization and performance record, and also to keep track of the bigger picture, for example, because once you filled out, let's say, for example, you filled out the whole year, you have your handwritten database and your track record. You could go through that whole year, get the new calendar, and learn from your mistakes. Every month, there's also a monthly, hang on, if I go over to there, a monthly performance overview. How can I improve? How many trades did I take? If you took more than 50, 60 trades within a month, or let's say 80 trades, did I overtrade? Could I do something better? Could I increase the quality of my trades? All those questions, and that's at least how I felt as a beginner trader. Of course, you made profit for the day, but I lost the track of the bigger picture overall, that I'm actually still making profit, even though I had a drawdown day today. But because I managed my risk well, I only lose 1 or 2% for the day, and yesterday I, for example, made 4%. It helps you, definitely, to track your performance, think of the bigger picture, to not forget news anymore. By the beginning of every month, you can simply fill out all the important news events that are important for your trading. If you trade the pound US dollar, you also maybe want to write down British news and stuff like that. You have your trading rules in here, write down some notes and all that. I think it's going to be a great tool with the journal and the checklist specifically designed for traders. Because what I found, of course, there are calendars out there that you can simply use, but nothing's really designed for traders. Like, for example, the checklist. Everything's digital and all basically set up with a subscription service, which is getting annoying if you already are a trader and you've got a few subscriptions already running. And just the feeling of writing something down on paper feels, in my opinion, better than, or I can be more consistent with writing things into a calendar journal or with the checklist and doing it online digital. That might be a generational thing, but yeah, that's the consistent trader that's gonna be ready, I think, by the end of the month, hopefully. It's a lot of work. And yeah, I will be doing those live streams like today, for example, more oftenly, I think 2 or 3 times per week. And yeah, so overall, I do a live trade daily, brother. I know I would love to do a daily live trade, but I can't trade live with my live money and do live streams at the same time. And I need that concentration. I need to perform at my highest level of performance. It's for me not possible while I have to talk and think about, for example, the next topic that I'm talking or doing the analysis. I have to sit in complete silence, look at the chart, do my analysis, go through my checklist. If everything's matching up, that I can actually be consistent. Because, like mentioned before at the beginning, I used to take trades based on feelings and emotions and revenge trades. And that checklist actually helped me from preventing that. That's why I'm trying to bring that out now, also with the calendar. And yeah, I hope you guys like the stream. If there still are any questions, feel free to ask them. Micra, please mute yourself. Sorry, I completely missed that. Maybe I can still find. I think a few people already left after the presentation. That's no problem. Go and mute whoever is talking by yourself. Right click and mute. Can you mute those with mic open? Couldn't hear you couldn't hear the last 5 minutes. Was it that bad? Oh, that's unfortunate. Hang on, let me turn on my Discord volume again. No, I did not know the setup was in the flow, in the presentation flow. But it's all good. You can still watch the whole recording this time live on YouTube. everything should have been recorded without any lags and delays. I think the total duration of the stream today was around 2 hours and 10 minutes. So yeah, everything's recorded to YouTube now. I'm really sorry about people that can't mute themselves on the Discord server, but yeah, you can just mute them yourself or simply enjoy watching it on YouTube. No worries, Godfather. I really enjoy doing those live trading sessions as well. I just can't trade at the same time. But yeah, maybe some of the things I said helped you through on your trading journey, or maybe some topics I brought up helped you, for example, for a specific problem that you're currently facing with your trading. Yeah, that's why I'm doing it. I wish I would have heard that stuff. Well, I mean, I heard it, but I actually didn't realize that this is the actual key to consistency and to long-term profitability. Having rules, consistent rules, and it's the problem at the beginning for me, I'd say, was that it wasn't as much fun anymore by doing the same things every day. And that's for me at least wasn't the reason why I started trading in the first place. Doing something different every day, it was cool and exciting, and trading, oh yeah, that's awesome, up, down, up, down, up, down, taking dozens of trades every day, but not getting anywhere close to the targets that I wanted to achieve. All right, guys, thank you very much. I have to get going now, so take care, trade safe for the rest of the New York session. Right now it looks like we're amping up for a potential continuation move to the upside. We will see what's going to happen. We've got the new hour that just opened up. I'd say I'd wait until 1 p.m. to see how lunchtime played out. Maybe look for more divergences, because we see that Nasdaq is still leading the race right here, already above its most recent high again. The S&P is still lagging behind. Same for the US 30 Dow Jones Index. But it looks like we could be looking at some continuation based on a 15-minute chart. All right, guys, take care and trade safe. I will be back next week, I think either on Tuesday or Wednesday.